Good evening and welcome to day 3 of revision, audit and assurance. So we had 2 days of revision in which we did some questions from various papers, like first two papers, that is on June 2020 paper as well as December 2019 paper. We have attended some questions. So from there we are moving into June 2019 paper. So today we are going to see how to answer on audit and assurance paper. June 2019 paper is a full paper. It has the MCQs as well as it has the theory questions. So we are going to explore the paper and we are going to attend the questions. So first of all, look at the paper. The paper has been downloaded, uploaded into the Google Drive. So you guys can download from the Google Drive, or you can go to ACCA website and you can download from there. Please get hold of this paper. Right. So if you go to the ACCA exam paper, you can download it. So before going further, I want to tell you one more thing. The ACCA has added a new feature. There is some quizzes. They have added some quizzes this time. So if you guys have free time, please make sure you are going to these quizzes, self-check quizzes, right? And you do those quizzes and see how you are faring in terms of the knowledge. And before starting, one more point which I want to tell you is about your mock exam. So I have corrected only 4 of you have answered the mock exam. Out of that 4 of you, one guy has written for a different paper. I don't know how it happened. Other 3 of you I have corrected and I have given the marks. Marks are not so promising. A lot of work to be done. I have given you the individual feedback. So go through the feedback, and if you don't have if you have a doubt about the feedback which I have given or any areas you want to clarify, please feel free to drop a message. Let's go to the paper now, and I'm trying to figure out where the paper is. I just downloaded the paper somewhere. It went. Okay. So as usual, this paper has 30 marks questions which is coming from MCQ, and it has 30 mark question which coming from structured case questions. So we have the 15 MCQs here, and then we have the structured questions after that. So today, first of all, I'm going to attend these MCQs, and I'm going to explain how to attend these MCQs as well, right? So when it comes to MCQs, it is not wise enough to sit and think which set of MCQ I am going to attend. So your ACCA paper has 3 sets of MCQs. Each set has 5 questions. My suggestion to you is just start attending those questions from the question number 1. MCQs, the cases, if you start ranking, it can be very confusing, not like a structured question. When it comes to structured question, you are supposed to rank and do. But when it comes to MCQ questions, don't rank, just do it, right? And when it comes to MCQ questions, one thing you have to understand is when you start doing, if you get stuck, if you don't understand a particular MCQ question, just leave it and go, right? Don't waste too much of time. If you read the question and if you don't understand for a minute, that's it. Just leave the question and move to the next question. That's what you are supposed to do. Okay, so we are going to have a look at these questions, and we are going to discuss how to write how to pick up the right answers. One more point regarding MCQ. Always you have to remember there's no one right answer for this MCQ. Sorry, there may be more than one right answers. So always you have to pick up the most appropriate answer for the question. Keep that in mind when you are doing an MCQ question. Right, let's now start from question number 1. Section A, all 15 questions are compulsory and must be attempted. It gives you 30 marks. Please use the grid provided on page 2 of the candidate answer booklet to record your answer to each multiple choice question. Do not write out the answer to the MCQs on the lined pages of the answer booklet. Each question is worth 2 marks. So you don't have this problem. You have a computer-based examination. So you have to directly answer there. The following scenario relates to question number 1, question 1 to 5. So we are going to see the first set of MCQ questions. You are an audit manager at Hotiko, and you are considering number of ethical issues which have arisen on some of the firm's long-standing audit clients. When you read that question itself, some spark should happen in your brain. Number 1, ethical issues. They are talking about ethical issues. What is an ethical issue? Now, ethical issues are the issues where you have the what do you call the principles, and then you have the threats, and then you have the safeguards. Immediately, the number 552 should come to your mind. There are 5 principles, 5 threats, and 2 safeguards. Then, which have arisen on some of the firm's long-standing audit clients. What is that? Long-standing audit clients. Suddenly you remember, yeah, an auditor can be an auditor of a company only for 7 years. If you're in a listed company, an audit partner can act as an audit partner for the company only for 7 years. If we act as an auditor for more than 7 years, what will happen? Yeah, 7 years. So if we act as an auditor for more than 7 years, what will happen? He will lose his independence. Regarding the mock exam, what I did, right? What you guys did, right? When I look at your answers, when it comes to ethical question, you guys have correctly identified the ethical problem, but you have not explained it. If you don't explain, you are losing 1 to 1.5 marks there. What you have to say? You have to say, look, the auditor is working for more than 7 years, which creates a threat to independence. If an auditor works more than 7 years, he'll be too familiar with the people. Therefore, he may not question people properly. He may have less professional skepticism. Therefore, we have to change the auditor after 7th year. So you have to explain your problems. Most of you are just identifying the problem in just one sentence. You're not going to get the full marks there. You may be getting, if it is a 2-mark question, you may be getting half mark for identification of the problem, or sometimes if it is a 2-mark question, sometimes maximum 1 mark you might get. You won't get the full 2 marks if you don't explain. Unfortunately, I did not see a proper explanation in the MCQ questions. What in the mock exam questions, what you have done. You are an audit manager at Hotiko, and you are considering number of ethical issues which have arisen due to some of the firm's long-standing audit clients. Hotiko is planning its external audit of Trico. Yesterday, the audit engagement partner, Charlie Thrower, discovered that a significant fee for information security service which were provided to Trico by Hotiko is overdue. 2 problems there. Number 1, Hotiko is our audit firm, and Trico is our client. So we are the auditor of Trico. And then on top of that, we have been performing information security services for them. On top of that, that particular fee for the information security services what we have provided is overdue. Now, he is not my client, he is my creditor. Sorry, debtor. And I am not the auditor for him, I am his creditor now. So I am worried about my money. Charlie hopes to be able to resolve this dispute amicably and has confirmed that he will discuss the matter with the finance director, Percy March, at the weekend, as they are both attending a party to celebrate the engagement of Charlie's daughter and Percy's son. Wow. Charlie's daughter, who is Charlie? Charlie is our audit engagement partner, And who is Percy? Percy is the finance director. So Charlie's daughter and the finance director's son are getting married. I don't see any independence there. There are three problems. Problem number one, the information security service is being provided in addition to the audit service. Problem number two, that service fee is overdue. Still, it has not been paid. Problem number three, the Charlie's daughter or the FD's daughter or auditor's daughter, whoever it is, yeah, auditor's daughter is marrying the client FD's son. There is independence here. Very strange case in audit. Let's go ahead and look at what is Bush is doing. How naughty Bush is. Bushco. Hotiko is the external auditor of Bushco and also provide other non-audit services to the company. So immediately something should come to your mind. Can an auditor provide other audit services to a client? Can provide, no problem, right? Provided appropriate safeguards are in place. And if it is a listed company, there are some additional prohibitions that should be in your mind, right? When it comes to listed company, if you are an auditor, you can't provide internal audit services, you can't provide valuation services, you can't provide accounting services if it is a listed company. If it is a non-listed company, you can provide those services provided that you have the right safeguards in place. That should come to your mind. So Hotiko is the external auditor that I read. While performing the audit of the year ended 31st December 2018, the audit engagement partner was taken ill and took an indefinite leave of absence from the firm. Partner left, okay. The ethics partner has identified the following potential replacements and is keen that independence is maintained to the highest level. Brian Smith, who is also partner in charge for the tax services provided to Bushco. Okay, so you're providing some other service, another service provided by a partner called Brian Smith, and the audit was delivered by a partner called whoever that guy who got killed here. Now, is it okay for the same partner to provide tax services as well as the audit service? Problem. Montinot was the audit engagement partner for the 10 years ended 31st October 2017. Now we are in the 31st October 2018. No, you can't act as a partner like that for 10 years without a break. You have to give a break. After 7 years, you have to stay 2 years without auditing the company, a cooling off period. After the cooling off period only, you can be the auditor. Something wrong with this company proposal. Cassie Dixon, who introduced Bushco as a client when she joined the firm as an audit partner 5 years ago. See, that lady doesn't have a problem. 5 years ago, she has been the auditor. Or 5 years ago, she has introduced that client to us. Seems to be okay. Who is also Pete Russo, who is also the partner in charge for the payroll services provided to Bushco, same as Brian Smith. Because if you take the tax services, the tax numbers come to P&L, it has to get audited by the engagement partner. If you take the payroll services, the payroll numbers come to P&L, it has to get audited by the payroll engagement partner. So is it okay for the engagement partner to be the payroll partner or the tax partner? It's a question mark. Let's see what are the big cases. Planco. Planco is a large private company with a financial year ending on 30th June and has been the audit client of Hotiko for several years. Alan Marshlow, who audits to the year ended 30th June 2018. And so he has been the engagement quality control reviewer. What do you mean by who is an engagement quality control reviewer? You guys know in audit, you have an audit junior, then you have an audit senior, then you have an audit manager, then you have an audit partner. But if the client is very risky, if the client is dangerous, for an auditor, audit firm will appoint one more partner to overlook the engagement's quality. That person is called engagement quality control partner or the engagement quality control reviewer. On the last two audits, the year ended 30th June 2018. At a recent meeting, he advised that he can no longer be EQCR on the engagement, as he is considering accepting appointment as a non-executive director and will sit on the audit committee of Plant Co. Is it okay? He was a partner and he is becoming the audit committee member. Now, what is the job of an audit committee? Questioning the external auditors, questioning the accountants, questioning the internal auditors, reviewing the internal controls. That's the role of the audit committee. So, until last year, Mr. Alan Marshlow was questioned by Hoti's audit committee. Oh, sorry, not Hoti, that's other company, right? What is this? Planco's audit committee. And now, Alan is joining the audit committee to question. There are two problems. Number one, as an audit partner, if you are joining the Hoti on the other side, right? Sorry, if you are joining the, what do you call this, Planco, as an audit committee member, you can influence the decisions regarding the audit firm, the Hotiko, taken by Planco. You can recommend, oh no, Planco is good. The Hoti is good. Take them as an auditor. Take them as an internal auditor. Take them as a tax advisor. Like that, you can influence them. That is one problem. There is one more problem. You have been the auditor. You have been the auditor of that particular company for last 2-3 years, right? And you have been the engagement quality control partner. And you move there as an audit committee chairman or audit committee member, and you see a problem in the way audit has been conducted. You see an issue in the way the audit has been conducted last year, right? And at that moment, you will tell them, sorry, you will not question the auditors properly. You will be covering your mistake. And maybe in the following years, if that particular audit firm, that is for Hotiko, and I'm the audit committee member of Planco, and my Hotiko colleagues have done the audit and come to Planco, I know obviously they have done some mistakes, but I will not question them, because I know if I question, Hotiko will lose its revenue. Right? So two reasons, dangerous, two reasons why this guy is not supposed to accept the appointment as the audit committee member. Number one, he can influence the decisions regarding Hotiko taken by the Planco. Number two, he can cover up, he can help to cover up either his mistakes or the Hotiko auditor's mistakes, because audit committee has a role of questioning the external auditors. So if I go down and see, like if you look at the dates even, see the financial year, the last two audits to the year ended 30th June 2018, right? So 30th June 2018 is the year end. Now, what's the date today? It's not given, but by looking at these dates, other dates such as October and October and October everywhere, most probably now October. So now October audit was financial year ended on 30th June, and if I'm supposed to get appointed as the Planco's audit committee, I may be getting appointed immediately, say somewhere in October. So automatically, the audit which I have done in June will come to my review in October. So I'll be reviewing my own work as well there. Problem. Wheatco. Wheatco is a listed company, is one of the Hotiko's largest clients. Last year, the fee for the audit and other services was 1.2 million, and this year it is expected to be 1.3 million, which represent 16.6% and 18.1% of Hoti and Co's total income respectively. What's the rule? The income from one client should not exceed 15% of my total revenue of the total revenue of the audit firm for 2 consecutive years. Now here, has it happened? Yes. Now this kind of rules are not applicable for non-listed companies. That's why when they give you when you read the question, you have to see whether it's a listed company or a non-listed company. All right, now let's see the MCQ questions. Which of the following statement correctly explain the possible threat to Hotiko's independence and recommends an appropriate safeguard in relation to their audit of TRICO. So what is TRICO? What happened with TRICO? We'll just brush up our memory again. Oh, that's information security, partner getting married, partner's daughter getting married to FD's daughter, son. Let's see. Which of the following statements correctly explain the possible threats to Hotiko's independence and recommends an appropriate safeguard in relation to the audit of TRICO? An intimidation threat exists due to overdue fee, possible, and TRICO should be advised that all fees must be paid prior to the auditor's report being signed. Now, that's, I mean, if I'm an auditor, I will not start the audit if they don't pay me if they did not pay the fee. Now, I will do the audit, and before I'm signing, you guys have to pay me the money. That sounds not so ethical, isn't it? If you are really worried about your fee, make sure your fee is collected before you start the audit, right? Not that you start the audit and you prepare the audit report and you tell them, hey, you want the audit report? Pay my audit fee. You want a good opinion? Pay my audit fee. If you don't pay my audit fee, I'm going to qualify your opinion. If you don't pay my audit fee, I'm going to not give you the audit report. No, that's not a fair treatment by the auditor. So if you're an auditor, if your client did not pay you the last year fee or any other fee, don't start the audit. A self-review threat exists due to the nature of the non-audit work which has been performed and an engagement quality control review should be carried out. True enough, I'm not saying no, because the client has provided information security services, if I'm not mistaken. Sorry, the audit firm has provided something called information security service as well as the audit service. So examiner is telling a self-review threat exists. Is it a self-review threat? Doubtful, because in an external audit, information security will not be reviewed to a greater extent. If it is payroll, yes, it's a problem, self-review, because the number I prepare on a payroll will come and sit as a salary expense in the P&L, which I'm supposed to audit. If it is taxation, again, tax computation numbers will come and sit on P&L and I'm supposed to audit. But if it is an information security service, there's no number coming out of the information security service, right? So therefore, it's not a big problem. But if the information security service is connected to the entity's financial internal controls, it's a problem. If it is about some other information security, it's not a big problem. And then audit work has been performed and engagement, yeah. So it looks like a suitable answer, right? I won't say it's the best answer. It looks like a suitable answer. Let's see. A self-interest threat exists due to relationship between Charlie and Percy, and Charlie should be removed as an audit partner. Bingo. There we have our answer. Number 3. Number 3 and 2. If there's a combination 2 and 3, no combination. So in such situation, your answer would be D. Right? Okay. Any questions in the way I answered? No. Right, let's go ahead. Taking into account the concerns of the ethics partner, which of the partners identified as potential replacement should take over the audit of Bushco for the year ended 31st October 2018? I told you that answer when I was explaining that answer. Brian Smith was the tax partner. Monty Nod was what? Montinot was the, he audited the company for 10 years. Cassie Ross was basically the one who introduced the client, but 5 years ago. So there's enough cooling off period. And Pete Frazo was the payroll partner. So these guys can't be the auditors. Only the suitable auditor would be C, the Casey Dixon. Which of the following correctly identifies the threat to Hotiko's independence and proposes an appropriate course of action for the firm if Alan Marshlow accepts appointment as a non-executive director of Plant Co? So if we accept, what we should do? So it creates self-interest. Yes, it creates self-interest. It creates familiarity. It creates familiarity threat. Yeah, it creates familiarity threat also to a certain extent, because self-interest arises because I'm the if Alan Marshlow acts as the auditor. This question again, I just forgot. Did not sleep properly, so the memory is not so good today. Where is it? Alan, where are you, Alan? Alan Marshlow. At the recent meeting, he advised that he can no longer be the EQCR of the engagement as he's considering appointment as a NED. Yeah. So he's the engagement quality control partner. So which of the following correctly identifies the threats of Hotiko's independence and proposes an appropriate course of action for the firm if Alan Marshlow accepts the appointment as a non-executive director? It creates self-interest threat, and it creates to a certain extent, it creates what do you call familiarity threat as well, because he's so not that he's going to be familiar with the client, but he's going to be so familiar with our audit firm. As an audit committee member, he may not be asking the right questions from our audit firm. Auditors. Course of action can continue with appropriate safeguards. No, if you're audit committee chair, and no, you can't be a director of a company, an auditor of the company. That is basic. Companies that defines it. If you are an auditor of the company, you can't be a director or employee of the director. It creates self-interest. Yes. It creates self-review. Does it create self-review? Yes, because as an audit committee chairman, or audit committee member, I'm going to review the external audit work, which was reviewed by me earlier. That creates self-review threat. Must resign as an auditor. Yeah, yes, that looks like a good answer. Self-review and familiarity. That's a tough one. So which one is bigger, the self-review which it is giving us, or the familiarity threat which is coming out? Which one is bigger? I mean, the self-review is much bigger than the familiarity what we are getting. So if the answer is B and C, I'll definitely choose B rather than C, because familiarity, like if I'm the audit committee member and if my guys are coming and presenting the audit, see, if I look from the client perspective, there's no familiarity. Good. I was the auditor earlier. I became the audit committee member. Then I can question the client more. So from that perspective, there is no familiarity threat. The familiarity threat arises only with the audit firm, because as an audit committee member, I'm supposed to question the audit performed by the external auditors. I may not question that properly. Therefore, I don't think that is a big problem. So that looks like the answer. Familiarity only, no, that's wrong. So the answer should be B. Self-interest and self-review must resign as auditor. You are separately considering PlantCo's request to provide internal audit services and the remit of these services if they are accepted. So your plan, basically, you are planning to provide internal audit service for PlantCo. Is Planco is a listed company? If it is a listed company, it's no. You can't be the external auditor and the internal auditor. It's a large private company, so it's not a listed company. Okay, let's see. Which of the following would result in Hotiko's assuming a management responsibility in relation to internal audit service? Okay. So let me take a minute and explain you what is this management responsibility, right? Management responsibility means you are taking responsibility for a client decision. Say even a small company, a small private organization, right? As I'm an auditor and I can act as their accountant also, provided I'm not signing a source document such as sales invoice. I'm not deciding the provisions which the company has to make. See, I'm only acting as a bookkeeper. I'm only acting as a just recorder of all the transactions. Then that's perfectly all right. It's a small company. But I'm the one who is deciding the bad debt provision. I'm the one who is deciding the prices. I'm the one signing the sales invoices, and I'm being the auditor of the company. I'm preparing the accounts for them, and I'm being the auditor of the same company. No, that's a no-no. You can't be the auditor and the decision maker. So that's why, like, if by any chance if you become the internal auditor, okay, external auditor, can he be the internal auditor? Yes, provided number one, he is not taking any decisions on behalf of management. Number two, he is not auditing any financial controls, because if you're going to audit financial controls as an internal auditor, and again if you're going to audit the same financial control as an external auditor, you have a problem. What is the problem? The problem is, I'm the, say for example, right, I'll pick one of you who is there in the class, Akil. I'll pick Akil. So Akil is my client and I'm external auditor of Akil, and Akil appointed me as his internal auditor also. Now and he asked me to check the payroll properly. I did a full audit on payroll. I could not find any problem. So I told Akil, Mr. Akil, there's no problem in payroll. Everything looks good. I went and I did a complete, I went out and then I came back as an external auditor. And I did the same checks. And this time I found a problem. Now, when I was an internal auditor, my report only reaches Akil, not Akil's investors, not Akil's shareholders. But as an external auditor, when I find a problem, it reaches Akil's shareholders, Akil's bosses, tax companies, everywhere it goes. It just reaches everywhere. Akil is now upset. He'll ask me a question. Hey Pras, what's wrong with you? I appointed you as my internal auditor. You did not find the problem, but when you are the external auditor, you found the problem. It's not acceptable. He might charge me. He might say you are wrong. I did not do a proper audit, internal audit work. It creates unnecessary problem as an external auditor, right? So that's why if you're an external auditor, if you can do an internal audit, no problem, but don't go and do an internal audit on a financial area, because you have to again do the same audit as an external audit also, which creates conflict of interest. Okay, so now let's see which one is the right answer. Which of the following should result in Hotiko's assuming management responsibility? Taking responsibility for designing and maintaining internal control system. Yeah, if you are going to design and maintain a client's internal control system, that's obviously management's responsibility. Determining which recommendations should take priority and to be implemented. Yes, that's again management responsibility. You are deciding what to be implemented. See, as an external auditor or an internal auditor, you can give recommendations to clients. Right? It's okay, because you are an auditor, you have gone to many companies, you have seen good practices, so you can give recommendations to clients. That's not a problem. but you can't choose which recommendation to be implemented. That is a management responsibility. So 1 is a management responsibility, 2 is a management responsibility. Determining reliance which can be placed on the work of an internal audit for the external audit. Now that is different. That is, as an external auditor, I am deciding how much I'm going to rely on the internal auditor. That's okay. You, as an external auditor, you can rely on the internal auditor and reduce your audit work. That's not a problem. That's fine. Number 3 is fine. Number 4, setting the scope for the internal audit work to be carried out. No, that I can't do as external auditor. The scope of the internal audit work need to be defined by the management. The scope of the internal audit work need to be defined by the audit committee, not by the external auditor. That's again taking the management responsibility. So if I take the answers 1, 2, and 4, right? And 1, yeah. The answer should be C, 1, 2, and 4. Yeah. Okay. Which of the following actions should Hotiko take to maintain their objectivity in relation to the level of fee income from VCO? Which of the following actions should Hotiko take to maintain their objectivity? This is a fee, right? That 2 years their fee went up by more than 15%. Their level of fee income should be communicated to those charged with governance. Yeah, my audit fee has to be communicated to the audit committee. That's true. Separate teams should be used for the audit and non-audit work. That's not connected. That's not anything connected to the audit work, isn't it? To the following actions should be maintain the objectivity in relation to level of fee income. No, that's nothing connected to the audit fee. Level of fee to be communicated to those charged with governance. That's fine, but not the second one. Request payment of the current year audit fee in advance of work being performed. See, your examiner is trying to trap you. The number 3 is not for the beat course problem. No. Number 3 is for some other problem, isn't it? Number 3 is for not beat course, as I can remember. Yes, number 3 is for no, number 3 is for the first one, the TRECO, right? That's where we had the overdue fee problem. So your examiner is trying to confuse you, because when you see this answer, there's an overdue fee. I read somewhere this overdue fee in the case, and you go and take the third one as your right answer. No. Request a pre-issuance review to be conducted by an external or accountant. A pre-issuance review, right? What is a pre-issuance review? An independent review, and what you call a quality control review. Pre-issuance, before the audit report is getting issued, one more accountant, one more auditor will be reviewing that particular audit work. So 1 and 4 sounds okay. If my fee is more than 15%, what can I do? I mean, if it is a listed company, is it a listed company, right? VCO is a listed company. Yeah, so technically that's wrong, right? You can't keep your fee above 15% for listed company. But in case, if you want to maintain your objectivity and keep the fee and keep that fee level at there, then number 1, you have to inform that to the audit committee. Number 2, you can tell that additional third-party auditor or third-party firm, or maybe internal quality control reviewer will come and review the work before issuing the audit report to ensure that we are independent. Separate teams, not relevant here. Request payment, also not relevant here. Those are the answers. Let's move on. Hotiko manufactures and sells pet toys to the wholesale market. Pet toys, okay. It has prepared its financial statement for 31st July 2018. and you are the audit assistant of Durham and Co. and you have been assigned to the current liabilities balances in the audit work plan. So you're auditing the current liabilities. So what are the examples of current liabilities blinking in your mind right now? Something like creditors, something like accruals, something like what do you call the short-term loans is what you should be thinking right now. You have been sorry, you have been calculated the payable payment period to be 66 days in 2018, 45 days in 2017. So what has happened to your payable payment period? It has become bad, right? And you are taking long time to pay your client, creditors. Earlier you took only 45 days, now you are taking 66 days. Either your suppliers are very happy with your performance, or they are giving you more and more credit, or else you have some financial problem, you are taking long time to pay that money. And have asked the directors of Chesterco to provide an explanation as to the increase in days. Chesterco receives monthly statement from its main suppliers and performs a regular supplier statement reconciliation. What do you mean by supplier statement reconciliation? Once you get a statement from your supplier saying, hey Chester, you had to pay us $200,000 or $3,000. The Chester has to check that with the what do you call the ledger, the creditors ledger, and see that $20,000 matches whatever overdue balance shown in Chester's ledger. If Chester's ledger says $18,000 and the supplier has told no, you have to pay me $20,000, there's a $2,000 difference. So that $2,000 difference has to be reconciled. It can be. Okay, it can be because of many reasons. One reason, I would have paid, but Chester did not receive the money. Therefore, I have reduced it from my balance, but Chester did not reduce it from their balance. This normally happens by the month ends. On the other side, Chester would have sold something else to me. I have not yet received it, so I have not recorded it as a purchase. So it has not been recorded as a creditor, but Chester would have recorded it as a sale. So in Chester's books, more $2,000 is shown there. In my book, that $2,000 is not shown. So those are the possible reasons. Let's see. There were inconsistencies noted in respect of the following in 31st July. Yeah. So we have three suppliers: Oxford Co., Pool Co., and Bath Co. So as per purchase ledger and as per supplier statement. So this is as per my creditor, this is as per me. To Oxford Co., I had to pay only $151,000. But Oxford Co is telling, no, you had to pay me $296,000. That's a big difference. Pool Co is much funnier. I'm telling Pool Co, no, you have to pay me $72,000. Hey creditor, I overpaid you. You had to pay me $72,000. So there's a debit note I raised. Therefore, you had to pay me $72,000. The Pool Co is saying, no, you had to pay me $84,000. Bath Co seems to be a okay problem, but again, there's a difference. Almost $10,000 difference. So Bath Co says, I know I had to pay Bath Co maybe around $82,000, but Bath Co is saying, no, you had to pay me $92,000. Now let's read one by one. What's the problem? What's the issue we have? Chesterco has a credit agreement with Oxford Co under which it receives goods 14 days before the supplier raises the invoice. Chesterco received goods worth of $144,000 on 18 July 2018, for which the invoice was received shortly after the year end, and in accordance with the agreement, the Chesterco entered into the transaction into its accounting records at the date of invoice. Right? So what has happened is, normally Oxford Co send us the goods first. If I place an order with Oxford Co, they send the goods first. and only after 14 days they send me the invoice. So without receiving the invoice, I can't make a record for purchase now. So I don't record it. Even though I have received the goods, even though I have used the goods in my production, even though I have in that 14 days I have sold it to someone else, still I don't record it as a purchase. Chesterco received goods worth of on 18 July. When was Chesterco's year end? Should be on 31st July. Yeah, 31st July. See. So on 18 July, they have received some goods. Of course, it takes 14 days. Maybe somewhere on August 2nd, I would have received the invoice. For which invoice was received shortly after the year end. Yeah, somewhere in August 2nd. In accordance with the agreement. Perfect. Chesterco entered the transaction into its accounting record at the date of invoice. Is it right? You would have received the goods. You would have used the goods. You would have sold it to your customers also. But still you have not recognized your purchase. Question mark. Let's see. Number 2, pool cost difference. That's a very unusual difference because they are saying they had to pay me, I had to pay them $84,000, but I am saying no, they had to pay me $72,000. That has to be further investigated. Chesterco's finance director has informed you that there was an error in closing the purchase ledger and it was closed 3 days earlier. What is that? There was an error in closing the purchase ledger. Okay, that was closed 3 days earlier. So invoices received on 29th, 30th, 31st of July were posted to 2019 ledger. Why is that? The directors of Chesterco have confirmed that following the discovery of this error, a manual adjustment was made using the journal book. Right? So if they have adjusted, now what happens is, now you have to close your purchase ledger on 31st July now. So, but erroneously that system got closed on 29th July itself. So 29 purchases, 30th purchases, 31st purchases were not recorded in 2018. They got recorded in 2019. So the Chesterco said, okay, we found this problem. We have passed a manual adjustment and we have recorded everything in 2018. Seems to be good. Now let's see what other problems are. Right. Before I'm reading the problems, I'm going to give you, right now I read the question, so I'm going to give you 5 minutes to pick up the answer. Don't look at the examiner's answer, right? Don't do that because that's not going to be useful for you guys. Try on your own. These 5 questions, only these 5 questions. What are the answers? You're going to get 5 minutes to do that. Okay, let's look at the answers now. Which of the following supplier balances would increase high risk in relation to completeness of the liability recorded at the year end? So what do you mean by completeness of the liabilities recorded? All the liabilities have to be recorded. All the credit balance have to be recorded. Right? All the creditors have been recorded in the books. I have not missed a creditor. Even whoever the credit balances I have recorded completely. I have not missed to record some of the purchases. So, which of the following supplier balance would indicate a high risk in relation to the completeness of the liability recorded at the year end? So that means which of the supplier balances indicate, or which statement indicate where the supplier overdue is not completely recorded, right? A supply with a high balance at the year end and with a low volume of transactions during the year. You see, you have been buying from one guy every month for 1,000 rupees. But at the year end only you have bought from him for 1 million rupees. Is it a problem of completeness? What do you mean by a completeness problem? You have recorded less than whatever actually occurred. That's what completeness means. If you are buying every month $1,000 and at the end of the year, if you are recording 1 million, you are not recording less, you are recording more. So it's not a problem of completeness. It's a problem of existence. Is this 1 million worth of creditors actually existing or not existing. That's what you are supposed to verify. Second, sorry, something wrong. Number 2, a supply with a low balance at the year end with a high volume of transactions during the year. So if you take every month, right, every month we have been buying for $1 million from that fellow, but end of the year, on the last month of the year, by the year end, I have only the balance I'm supposed to pay for him is only $1,000. If I'm buying every month $1 million worth of items from somebody, my year-end balance also should be $1 million now. It can't be $1,000. So supply with a low balance at the year end with a high volume of transaction during the year. That's an indication where some of the purchases at the year end may not have been recorded. Just to show a lower current liability position, some of the purchases could have been pushed to next year. So B is a potential answer. A supplier with low balance at the year end with a low volume of transaction during the year. That's normal, no? If you have low balance at the year end, low volume of transaction, that's perfect. A supplier with a high balance at the year end and with a high volume of transaction during the year, that's also normal. So the outlier there is B. A supplier with a low balance at the year end and with a high volume of transactions during the year, most probably the year-end transactions would not have got recorded, hidden. So it's a risk for the assertion completeness. The A is a risk for the assertion existence. So answer is B. Number 7. Which of the following would correctly explain why the payables payment period has increased from 45 days in 2017 to 66 days in 2018? Right? Chesterco received a prompt payment discount from one of its suppliers for the first time in 2018. If you got a prompt payment discount, what will happen to your payable amount? It will come down. If it comes down, what will happen to your creditors payment period? It will come down. So it can't go from 45 to 66 days. So A is out. Chesterco obtained a trade discount from one of its bigger suppliers. He has reduced the amount owed to that supplier by Chesterco obtained a trade discount from one of its bigger suppliers, which has reduced the amount owed to that supplier by 10% in the year. Again, same problem. If your credit balances are coming down, right? Your payment, what will happen to your payment period? It has to come down. It can't be up. Chesterco purchased an unusually high level of goods in July 2018 to satisfy a large order and had not paid for those goods by the year end. Yes, that's a potential candidate. We'd have purchased so much of items at the year end and my year end credit balance have gone up. As a result, my year end payable payment period also looks high. So what's the formula for computing payable payment period? Average creditors divided by credit purchases multiplied by 365. So if your year-end creditors goes up because of your unusual purchase, automatically what happens? The year-end the average credit balance goes up. Automatically that boosts up the payment period. So C is a potential answer. Chesterco took advantage of extended credit terms offered by a new supplier in respect of a large order, which it had fully settled by the year end. So if you are fully settled by the year end, now that's stupid. No? If you are fully settled by the year end, you don't have the creditor balance at the year end, isn't it? So only the overdue creditors you will be having at the year end, not the fully settled ones. Nonsense. All right. So our answer is C. Let's go ahead to question number D8. Which of the following is an appropriate action in respect of inconsistency in the balance with Oxford code? appropriate action as auditor. What action I'm supposed to take? What is? Let me refresh my memory. What's happening with Oxford Co? Is Oxford okay? So Oxford Co is telling we had to pay them 296, but we are telling 151, and okay. So the $144,000. Okay, this is a problem, right? I mean, they send us the goods and they invoice only after 14 days. I have received the goods, I have used the goods, I have sold the goods to my customers, I have made money also, but still I have not recorded the purchase. So ideally, this has to be booked, right? So if you add this 151,480 plus this amount, most probably it will be somewhere equal to this number. So this has to be booked. That's action. I mean, before even reading the MCQ, we know the answer, right? Okay. The auditor should take no further action as this is the timing difference which was resolved upon receipt and posting. No. By the year end, you have received the goods and you have used the goods and you have made money also. You have to record the purchase. The auditor should request the purchase ledger balance is amended at the reporting date to reflect the recent invoice. No, you should not go and adjust the purchase ledger balance because you have not received it in the invoice. So you can't go and adjust the purchase ledger because we don't have the right amount. The auditor should contact the supplier and request the supplier statement as a current date. No need to do that. Why? Because as per the agreement, he's going to send you the invoice only after 14 days. So don't disturb it. The auditor should request that an accrual is created in respect of the good received, but not yet invoice. Yes, that is the right answer. Right? You have to tell them, look, this much of purchase have come, make an accrual. No need to go and ask from the supplier to give the invoice. No need to push him, nothing, because you can act as per your agreement. You can receive it after 14 days. I don't have any problem. But you have received some goods worth of this much of value. Make an accrual for that. If the amount is higher or lower, later you adjust it. But at the moment, make this accrual. That's what you have to say. Question number 9. Which of the following would be a valid explanation for the difference in respect of pool co? An invoice of 156. So what happened in pool co? Sorry, got that. Some investigation, right? The difference on these balances still need to be investigated. So what is there? I have to pool co. I'm saying pool co has to pay me $72,000. Pool co is telling no, we had to pay them $84,000. I had to pay 72,000. Okay, fine. Let's see. Which of the following would be a valid explanation for the difference in respect of pool co? An invoice of 156,403 has been paid twice. An invoice of 156,403 has been paid twice. Invoice of 156. Okay. An invoice of 156,403 has been posted as a debit note. Okay. And invoice of 156,403 has been received and processed prior to receipt of goods. Let's eliminate one by one, right? Look at the third one, that is less confusing. An invoice for 156,403 has been received and processed prior to receipt of the goods. So if I have received, if I have got an invoice and I have recorded that, what will happen? In my books, there will be a creditor. But that fellow has not yet sent me the goods, so I will not appear as a creditor there. Pulko and me, right? Now I have received the invoice, so I have booked the purchase. So in my books I had to pay Pulko 156. But when it comes to Pulko, they have not yet sent the goods, so they won't record me as a debtor yet. So in the Pulko's books, I will not be appearing as a debtor, but in my books, the Pulko is appearing as a creditor. So I have to pay Pulko of 156, and Pulko may not have a balance about me. Is that the case? No, that's not the case here. So we will eliminate problem number 3. So if we take out problem number 3, our potential answers are either 1 only and 1 and 2 only. Let's see. An invoice, second one, an invoice for 156 has been posted as a debit note. Okay. So if you have posted it as a debit note, a supplier's invoice, if you have posted it as a debit note, if you posted it as a debit note, what happens? If you post it as a debit note, it will be a balance per supplier statement. It will show as a receivable amount, right? So the whole amount should be on this side. Yeah, the whole amount, if I post as a debit note, that's a bit confusing. So let's put a small Excel sheet and see. So we have debit, we have credit. So what they are saying, the difference on these balances still need to investigate. An invoice for 156 has been posted as a debit note. First of all, I'll just 156403. 156403. The amount there, 78 or 72. $84,235. I'll take this difference also. $84,235. Sorry. And 72,168. 72,168. This is a tricky one. So these two you include here. Yeah, 16. It is our number. So forget about these two. This is our number 156. So some problem here. Something has happened. So 84. Now what they are saying is, here I have passed a double entry for 156.
156403. So if I have paid him, I mean, an invoice for 156 has been posted as a debit note. So it should have been appearing here. It has been posted as a debit note. So if this is posted as a debit note, then there will be a payable, no? So if I go and post as a debit note, it is $72,000, $84,000. Okay. Hold on. Invoice for 156403 has been posted as a debit note. Can't be, no. Sorry. Okay. Got it. Now you see, it's like this. An invoice for 156 has been posted as a debit note means fine. So my balance would be how much? If I net it off, my balance would be this minus this. It will show as $72,000. That's fine. But then if I have recorded as a debit note, the client's balance should be how much? The client's balance should be this plus this, because now clients and the client already had, I mean, not the client, the creditor already, I had to pay creditor $84,000. So he is showing in his account, I had to pay him $84,235, right? And then again, I purchased from him for 156. So my total amount, whatever I'm supposed to pay him, has gone up. So it has gone up to this amount. Now, this particular invoice I did not record as a credit balance, I record as a debit balance. So if I record as a debit balance, debit balance, my balance should be 72,168. But that's not right, no, because as per the question, the creditor's ledger shows, or the creditor's supply statement shows, that I had to pay him $84,000, not 240. Understood? So that can't be a right answer. 1 and 2 only. 1 only. An invoice for 1560403 has been paid twice. So if I put here one invoice for 156403, okay, that's the answer. So this one is the amount I'm supposed to pay my creditor. So this amount I have paid twice. So I have paid once 156,403. Erroneously, I made one payment, 156,403. So since I made two payments, now if I take the total here, it's this. This side total is this. So the net balance is going to be how much? This minus this, 72,168. So that's the amount which in my book, since I paid him twice, it shows like he has to pay me $72,000. But actually I had to pay him and the $84,000. So the answer is A only, 1 only. Got it? All of you clear about it? Okay, last one. Which of the following would not provide sufficient and appropriate audit evidence over completeness of the purchase ledger balance in respect of Barthco? Provide sufficient and appropriate. Okay. Purchase ledger. Okay. Completeness. So what is completeness? All the purchase, whatever happened, should have been recorded. That's completeness. Obtain the journal book. Journal book already have purchases, and confirm that all invoices recorded as received from Barthco dated 29 to 31st July have been manually adjusted for. So confirm that all invoices recorded as received from Bathco has been manually adjusted for. Now that is actually not to mean. If somebody asks me to confirm the incompleteness, what I should do? I take all the suppliers invoices and check whether it has been recorded. Now here what they are saying is take the journal book first. And all the invoices recorded as received from
it says not.
Sorry?
It says not provided sufficient and appropriate audit evidence.
Which of the following would not provide sufficient appropriate audit evidence over completeness of the purchase ledger balance in respect of, okay, which of the following would not provide sufficient appropriate audit evidence? Okay.
If it's completeness, we can obtain the invoices and go back.
Yeah, so which of the following would not provide sufficient and appropriate audit evidence over completeness of the purchase ledger balance in respect of Bathco? Okay, so if I take what I'm doing is I'm taking the journal book. So in the journal book, all the invoice I have audit record and confirm that all invoices recorded as received from Bathco dated 29 to 31st July have been manually adjusted for. Okay, so in that case, that's giving me evidence that 29 to 31st number is whatever invoices I have recorded, that is relevant for 29 to 31st, and I'm ensuring all the invoices relevant for 29 to 31st has been manually adjusted for. So that is giving me evidence for that. Good. Then that can't be the answer. Review the accruals listing to ensure goods received from Bathco post year end for which an invoice has not been received have been recorded in the correct period. No, that can't be the answer. So review the accruals listing to ensure. So accruals listing means already I have posted everything. So I'm checking the accruals listing means I'm taking already they have recorded. So if they have recorded, right? If they have recorded, it's not going to verify completeness. No? If I'm testing whatever recorded is there, it has happened or not happened. That is, I'm testing occurrence. So review the accruals listing to ensure goods received from Bathco post year end. Review the accruals listing to ensure goods received from Bathco post year end, and for which an invoice has not been received have been recorded in the correct period. Now there's a problem. Next year, post year end means after year, whatever goods received after year. So what I'm doing is I'm taking the accruals listing, I'm taking the invoices which are relevant for the next year, and I'm checking whether they are recorded in the correct period. So what's the assertion I'm covering there? I'm covering an assertion called cutoff there, not completeness. Yeah, so that should be the answer in that case, because I'm covering cutoff. For post year end cash book payments of Bathco, confirm date of matching invoice and pre-year end, and if pre-year end agree to liability. For post year end cash book payments, confirm date of matching invoice, and if pre-year end agree to liability. Okay, that will ensure completeness, because I'm taking the next year cash book payments to Bathco. So I have made some payments now to Bathco. So confirm the date of matching invoice, right? So there should be a matching invoice, and if pre-year end agree to liability. So it's like this. After the year end, I'm taking all the payments done to Bathco, and after the year end, payments done to Bathco can be two types. One is payment relevant for that the next year, or the payment relevant for the previous year. So payment relevant for the next year, check the invoices. If it is payment relevant for the previous year, I check the liability recording. In the liability, have they recorded or not recorded? So I'm covering completeness there. Review a sample of invoices received from Barcode recorded post year end and match to GRN to determine if they should have been recorded at the year end. Okay, that's again completeness. So I'm taking a sample of invoices they have received, right, after the year end, and check the GRN to see whether they have received it before the year end or after the year end. And if they have received it before the year end, they have to take it to their liability, which will ensure completeness. So I'm testing whether these guys have recorded, whether these guys have taken that into liability consideration or not. Taken that into ensure the completeness of the what do you call completeness of the liability or not. Right. So the answers, I forgot what answers I told you. The answers would be what they told, this one B. 7th question we picked up an answer C, right? C was your answer. Yeah. I'll make a note of it. B, C, and then this one. Which one of the following appropriate action was really? Okay, this one we decided to replace a purchase ledger.
D, sir.
D, no? D, okay, D. And 9th one we decided a while ago, A. And 10th one we decided B. So answer is B, C, D, A, B. B, C, D, A, B. Where is you guys' answers? B, C, D, A, B. Wrong. B, C, D, wrong. B, C, D, wrong. B, C, D, wrong. All got wrong answers. B, C, D, A, B. Let me check the examiner's answer. I'm not too sure about what I did as well. This is June 2019. Yeah. Okay, here's 6 supply logos. Yeah, this one. B, C, D. Yeah, that's the answer. B, C, D, A, B. Okay, guys, how many of you got 5 out of 5? Nobody? No? Yeah. How many of you got 4 out of 5? Raise your hand. Nobody? You can raise hand here, right? Sure. Okay, if you have got 3 out of 5, you are okay. If you have got less than 3 out of 5, then that's really bad. Keep that in mind. Let's go ahead to our next section. Where's my question paper? This is what we did. Okay, we'll quickly do this. Viola Co. is a manufacturer of shoes you are the audit manager with Cello and Co. and you are performing an overall review of the financial statement for the year ended 30th September 2018 prior to the issue of the auditor's report. So at which you are doing an overall review of the financial statement. That means you are reviewing the financial statements just before the year end, prior to the issue of auditor's report. Profit before tax for the year end was around 31.4 million and last year it was 120. The company has improved its performance. Analytical procedures. As part of your overall review, you have performed analytical procedures over the draft financial statements and have noted that the trade receivable collection period is lower than it was during the interim audit performed in July 2018. You are aware that so trade receivable collection period is lower than interim audit. Okay. So the debtors collection period, earlier we checked the creditors, now it is debtors. The debtors collection period has come down. You are aware that credit controller of Violaco has left the company in August 2018, and the directors have said that as a result, the company is experiencing difficulty in debt collection. You have noted that trade receivable collection period is lower than it was during the interim audit performed in July. So collection period is lower. That means the number of days have come down, which is good. You are aware the credit controller of Violaco has left the company in August and the directors have said that as a result, company is experiencing difficulties in debt collection. Sounds like, anyhow, maybe I'm not understanding it properly, but it looks like the data collection.
So the dates.
Sorry?
The dates, sir.
So I didn't understand that.
The interim audit was there on July 2018.
Yes.
And, the credit controller left the company on August, and from there onward, they are facing the difficulties on collection.
No, not like that. Because your year end is on 30th September now. So you are now doing the overall review. So your review, you are doing an overall review of the financial statement for the year ended 30th September 2018 prior to the issue of the audit report. As part of your overall review, you have performed analytical procedures at the year end, that is somewhere in September, and have noted the trade receivable collection period is lower than it was during the interim audit performed in July 2018. So it's a good thing. At the year end, by 30th September, your collection period has come down. And your credit, despite the fact that your credit controller leaving the company on August. Is that clear?